Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. This is the last video on financial statement analysis. So far I have completed two topics, that is comparative statement analysis and common size statement analysis. Only one or two short problems we have done on trend analysis. In this video, few more problems on trend analysis I'm going to explain, and that will be the end of the chapter, financial statement analysis. Hope my regular viewers have watched all the earlier videos. Without understanding theory, you should not come to the problem. So first, be acquainted with the procedure, with the method, meaning of funds of this financial statement analysis. Now, before starting the problem number 14, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the solutions of 14th and 15th problem, then I'll explain all the points in detail. Come on, see the 14th one. Calculate the trend percentages from the following figures of X Limited, taking 1979 as the base and interpret them. Trend analysis is very similar to comparative analysis. In comparative analysis, we compared 2 years data, last year and current year. If you want to compare more than 2 years data, we use trend analysis. For a number of years, we want to find out what are the changes in the variables over a period of time. We apply this trend analysis. It's simply index numbers, taking normally the first year as the base year, and we calculate the percentages of all other years, taking into consideration the base year. That is trend analysis. So here in this 14th problem, you are required to calculate the trend percentages of X Limited, taking 1979 as the base year. First year is 1979. Then 1980, 81, 82, 83. Totally 5 years are given. First year 1979 will be the base year. And the variables are given for sales, stock, profit before tax. And all the values are given in the problem. We have to convert these values into trend percentages. So how to calculate trend percentages? See carefully here. X Limited calculation of trend percentages, base year is 1979 given in the problem. In the columns, I am taking the years 1979, 80, 81, 82, 83. 5 columns. And here in rows, I have taken the sales, stock and profit before tax. The first thing you have to remember is the first year will be taken as base year, and for base year, all the trend values should be taken as 100. This point you have to remember. So the trend values of base year will always be taken as 100. The base year is 1979. So for 1979, we take 100 for sales, 100 for stock, 100 for profit before tax. All the values will be taken as 100. Now we need the trend percentages of other years. So how to find out the trend percentage of other years? See the formula. The other trend values will be calculated by the following formula. Trend percentage is equal to value in current year divided by value in base year into 100. Example, sales. The sales of 1980. You can see the problem. The sales of 1980 are 2340. And the sales of the base year is 1881. 1881. So what we'll do is, in numerator, we'll take the current year sales, 2340. Denominator will take the base year sales, 1881. So for 1980, 2340 divided by 1881 into 100, it comes to 124.40. This is the trend percentage for 1980. So 1980 trend percentage 124.40. Similarly for 1981, sales are 2655. So 2655 divided by 1881, base year sales. Base year sales are 1881. This will be taken in the denominator. So 2655 divided by 1881 into 100, 141.15. Here you take 1. Now we need 1982. So 1982 sales are 3021. So 3021 divided by 1881 into 100, 160.61. Last year 1983, the sales are 3768. So 3768 divided by 1881 into 100, 200.32. That's all. So we have calculated the trend percentages for sales. Similarly, we have to calculate the trend percentage of stock. So here stock. 1980 stock is 781. So 781 divided by 709. 709 is the stock value of base year 1979. So 781 divided by 709. 781 divided by 709 into 100, 110.16. Similarly, 1981, 816 by 709, 944 by 709, 1154 by 709. We got the trend percentage for stock. Similarly, you have to calculate profit before tax. Profit before tax, 435 by 321. 435 by 321 into 100, you will get 135.51. Similarly, 458 by 321, you will get 142.68. 527 divided by 321, you get 164.17. Last one, 672 divided by 321 into 100, you get 209.35. That's all. This is the calculative part of trend percentages. Now it is asking you to give the interpretation also. So how to give the interpretation? One by one we have to interpret. First I am interpreting about the sales. 100 is the sale in the base year. Now it has increased to 124, 141, 160, 200. Double. 100 will become 200 from 1979 to 1983. That means sales have doubled during the period of 5 years. In 5 years, sales have doubled. That is the observation for sales. Now in interpretation. The growth in sales has been impressive. Very good increase in sales because it has doubled. Sales have doubled in a period of 5 years. Although the growth is more or less uniform in the initial years, there is a jump in the rate of increase in the sales in the last year. See here, 100 to 124, so 24% increased. Then 24 to 41, 41 to 60, then 60 to 200. There's a big jump in sales in 1983. That is the observation in sales. Now next one is stock. The rate of growth in stock has been fluctuating while the growth rate was sluggish in 1980-81. See here stock. 100 to 110, so 10% increased. 10 to 15, only 5% increased. From 15 to 33, 18% increased. So there is a big jump increase from 1981 to 82. Then 33 to 62, again a big jump. So what we observe? A small increase in stock is observed in 80-81. From 79 to 80, 80 to 81, the growth in stock was lower, less. There is a big jump in increase in stock in 1982 and 83. Though there was a spurt in 82 and 83, the growth has been satisfactory. Considering the slower growth of stock coupled with a higher growth, faster growth in sales is indicator of good inventory management. Normally what should happen? The sales should increase at a higher rate and stock should increase at a lower rate. It shows that better inventory management. We are not accumulating the inventory. Our inventory turnover is fast. That's a good indicator. Now, the profit before tax, see here. The profit before tax 100 to 135, 135 to 142, 142 to 164, then 209. That means profit before tax has been doubled in a period of 5 years. So here the profit before tax has grown consistently except for a slowdown in 1981. See, 35 to 42, only 7% increased. But from 42 to 64, 22% increased. So only small increment you will observe in 1981. But from 1981 to 1982, big increase is there. From 64 to 209, again a heavy increase in profit before tax. On an overall basis, growth is profit before tax kept pace with the growth in sales. So if we closely watch, the growth in profit is consistent with the growth in sales. So normally when sales grow, the profit before tax will also grow. That is the observation. The overall growth rates achieved by the company are satisfactory. So if we compare these three variables, we can see that there is a satisfactory growth rate in sales, in stock, and in profit before tax. That is the interpretation for this 10 percentages. This is the end of 14th problem. Now see the 15th one. From the following data relating to the liabilities side of the balance sheet of Maruti Limited for the period 31st December 86 to 31st December 89. The 4-year data is given 86, 87, 88, 89. You are required to calculate a trend percentage taking 1986 as the base year and comment. We are given the variables of liabilities side of the balance sheet. We are not given asset side. Only few items of liabilities side is given. We have to calculate the trend percentage taking 1986 as the base year. For base year, all trend values will be taken as 100. Now see. Maruti Limited calculation of trend percentages 86, 87, 88, 89. 4 years. So equity share capital, general reserve, 12% debentures, bank overdraft, bills payable, sundry creditors, outstanding liability. So in this, equity share capital and general reserve, these two are shareholders fund. Debenture is a long-term fund, long-term debt. Then bank overdraft, bills payable, sundry creditors, and outstanding liabilities. These four are the current liabilities. So we are given information only of the liability side, right? 1986 is the base year. So we take all the values of base year as 100. So all 100 I have taken. Now we need to calculate the index number for, percentage, 10% for 87, 88, 89. Now again come back to the problem. Same formula we will apply. What is that formula? Value in the current year divided by value in the base year into 100. So first of all, share capital. The current year is 1000. Base year is also 1000. So 1000 divided by 1000 into 100. You will get 100. This 100. Now 1988. 1200 divided by 1000 into 100. 120. 1500 divided by 1000. Denominator we take 1000. Numerator we take 1500. So 1500 by 1000 into 100. 150. So we have calculated the 10 percentage for equity share capital. Similarly, we calculate the 10 percentage for general reserve. So current year is 1987. See here, 1000 divided by 800 into 100. You will get 125. Take the calculator. Keep ready the calculator. While I am explaining, make your own calculation and check whether you are getting the same answer or not. Then 1200 divided by 800 into 100, you will get 150. Last one, 1500 divided by 800 into 100, you will get 187.5. So we have calculated 10 percentage for equity and general reserve. Now debentures. Debentures are base year 400, current year 500. So 500 by 400 into 100, you will get 125. Then same 500 is there for 87 500, 88 500, 89 500. So same values will get 125, 125, 120. Now bank overdraft. Bank overdraft base year 300, current year 400. So 400 by 300 into 100, you will get 133.33. Similarly, 550 by 300 into 100, 183.33. Last one, 500 divided by 300 into 100, 166.67. Same way you calculate the 10 percentage for all the values. Now you have to give the comment. The comment is, the information available pertains to the liability side of the balance sheet, so no comment can be made on the usage of funds as application of fund is not given. Actually, balance sheet should consist of liabilities and assets. Liabilities are those activities which relates to the fund, sources of fund, and assets, application of funds. So from where the fund is coming, that is on liability side. Where the fund has gone, that is on asset side. But in our problem, assets are not given. So we cannot give the complete explanation about the financial position. We can give the comment only on the liabilities side, sources of funds. That is the first point. Second, the share capital increased by 50% over a period of 4 years. See here, 100 has become 150. 100 has become 150. So 50% share capital has increased over a period of 4 years. First point. Second, there is consistent increase in general reserve indicating moderate increase in profitability. General reserve 100 to 125 to 150 to 187.5. So you can see there is a consistent increase in general reserve, and general reserve contains profit. So we can make the conclusion there is a moderate increase in profitability over the period of 4 years. Third one, the debentures increased by 25% in 1987 and thereafter remains constant. 100 has become 125. Again 125, 125. That means only 25% debentures increased and thereafter it remains same. Next one is bank OD, bills payable, sundry creditors, outstanding liabilities. These four are the current liabilities. So all the current liabilities are increasing. See here, 100 to 166.67, 100 to 140, 100 to 200, 100 to 300. So we can say all the current liabilities shows an increasing trend over a period of 4 years. But the highest increase we can see in other liabilities, which become 3 times. 100 has become 300, whereas the sundry creditors has doubled. Sundry creditors doubled, other liabilities tripled during a period of 4 years. So all the current liabilities shows an increasing trend, but the highest increase is noticed in outstanding liability, which increased by 3 times over a period of 4 years. The overall trend position appears to be satisfactory. From these trend values, we can say that all the values are increasing consistently. So there is a constant growth rate in all the variables over a period of 4 years. That's all. This is the end of problem number 15. Come on, now last problem on this financial statement analysis, problem number 16. This is the final problem on trend analysis on this financial statement analysis. The following data is available from the P&L account of Deepak Limited. So 4-year data is given 1990, 91, 92, 93. Sales, wages, selling expense, gross profit. So 4 variables are given and 4 years. All the values are given. You are required to show trend ratios of different items. A point. B point, trend percentage of relationship of wages, selling expense and gross profit to sales. So different trend ratios we have to calculate. First of all, we need to calculate trend ratios of the values which are given in the problem. In the problem it is given. So first we calculate the trend percentages for the values which are directly given. So Deepak Limited, calculation of trend ratios of different items 90, 91, 92, 93. Sales are given, wages, selling expense, gross profit. Already we know for the base year, the first year will be taken as the base year, whether it is given in the problem or not. It is not given, but still we take the first year as base year. So for base year, the trend values will always be taken as 100. So I have taken 100. Now we calculate the other trend percentages. 3,27,500, 1991 sales. 3,27,500 divided by 3,10,000 into 100, you will get 105.65. Similarly, 92, 3,20,000 divided by 3,10,000 into 100, 103.23. Last one, 3,32,500 divided by 3,10,000 into 100, you will get 107.26. So current year value we take in numerator and base year value we take in denominator. The base year sales are 3,10,000. That will be taken in the denominator. Same rule for wages. The 1991 wages are 107,500. Or 1990 wages also same 107,500. So 100%. Right? Now 92 wages are 1,15,000. So 1,15,000 divided by 107,500 into 100, you will get 106.98. So these are the trend percentages of the values which are directly given. Now secondly, it is asking you to find out the trend percentage of relationship from wages to sales, selling expenses to sales, and gross profit to sales. So first of all, we have to make the relationship of every item to sales. That means wages to sales, selling expenses to sales, and gross profit to sales. So here in this table I have prepared relationship of various items to sales. So first of all, wages to sales. The formula is wages divided by sales into 100. Wages divided by sales into 100. So 1990. So 1990 you can see the wages 1,07,500. And how much of the sales? 3,10,000. So 1,07,500 divided by 3,10,000 into 100, you will get 34.68. Now come to 1991. Wages are 107,500. Sales are 327,500. So 107,500 divided by 327,500 into 100, you will get 32.82. Now third year, 1992. The wages are 1,15,000. 1,15,000 divided by 3,20,000 into 100. You will get 35.9. Last one, 1,20,000 wages and sales are 332,500. So 1,20,000 divided by 332,500 into 100, 36.07. This is the relationship of wages to sales. Same way, we have to find out the relationship of selling expenses to sales. So numerator you take selling expenses, denominator you take sales. So first year, 25,750 divided by 3,10,000 into 100, we will get 8.31. Second, 29,000. 29,000 divided by 327,500 into 100, 8.85. Like that. Last one, gross profit to sales. The numerator gross profit, denominator sales. So 90,000 divided by 3,10,000 into 100, 29.03. Next one, 95,000 is the gross profit. So 95,000 divided by 327,500 into 100, you will get 29.01. Next one, gross profit is 77,500 divided by 3,20,000 into 100, 24.2. Like this, we have calculated the relationship of various items to sales. Now it is asking you to calculate the trend percentage of various items to sales. Now these are the relationship. Now we need to calculate the trend values. The first year will be taken as the base year. So for base year, the trend values are 100. So all these values I have taken 100 trend values. Now we have to calculate for other values, trend values. So current year value divided by base year value into 100, 32.82 divided by 34.68 into 100, you will get 94.64. 35.94 divided by 34.68 into 100, 103.63. 36.09 divided by 34.68 into 100, 104.07. Right? Current year value in numerator, base year value in denominator. Base year is this one. So 8.85 divided by 8.31 into 100, 106. 9.30 divided by 8.31, 111. 8.35 divided by 8.31, 100.48. Similarly, gross profit to sales. So 29.01 divided by 29.03 into 100, 99.93. 24.22 divided by 29.03 into 100, this one. 24.06 divided by 29.03 into 100, 82.88. That's all. This is the end of 16th problem. So totally 16 problems I have solved on financial statement analysis. The first video I have given on introduction to financial statements and what do you mean by financial statement analysis and interpretation, and then what are the techniques available for analyzing comparative statement, common size statement, and trend analysis. These are the things I have explained in the first video. Then 4 short problems we have done in the first problems video. Then remaining all the videos I have explained different problems on income statement and balance sheet of comparative, common size, and trend analysis. So this is the end of the topic financial statement analysis. Inshallah, the next video, next session I will start on ratio analysis in the subject of financial decision making. Inshallah, we'll continue the remaining topics in the coming videos. So keep watching, be blessed with immense knowledge. Inshallah, we'll continue.